Okay, so we're going to be looking for another pullback here. This last pullback didn't really set up the way we wanted it. Again, keep in mind that we look for these dots to spread out. And of course, that usually tells us the price is on the move. We're looking for the pullback. There's a pullback right here, but as you can see on this pullback, that arrow straight there, really didn't have a good black line separating from the blue line, separating from the yellow, or I should say. Again, you can see the blue line here, black line here, yellow line here. Right, really want those pulling apart. Look for another pullback here. Here's a crossover again here, which is not bad, but look at it, it's not quite, well, it might not be a bad entry. Let's wait for a pullback here. I think we're running a, I think we're running the Russell strategy at, well, 5, 10, 20, so we can stick with that. This is the 6E, that's a euro currency. It's $12.50 per tick. Okay, what we try to do is wait for these pullbacks. Now this one would be a bad entry right here, a crossover, although the spread looks kind of iffy right there. Usually you want to have a spread in progress with the red zero line and the red histogram. Wait for this pullback here. Again, we're going to go ahead and, if we're taking a short here, we're going to sell the bid. We're going to sell the bid. Again, you can do market, sell the ask, sell the bid. Remember, the ask is going to be one tick above the current price. Bid is going to be usually at the current price as a limit order. But usually your problems of getting in the trades is not necessarily how you're getting in. It's when you're getting in, typically. The MCD, again, multicolored dot indicator, can help us really find the better setups. Watch it here now, pulling back. Cover that bid. Again, we're using the chart trader here. Some people like using the dome, trading dome. Oh, there it is right there, right there. See it right there? Yeah, we have show me arrows you can actually turn on, which will actually tell you where the pullbacks are. It'll make a little sound. And I think we have the sounds turned off here. Now, is this spread better here? Well, I think it is. I mean, here the black is separating from the blue. Yeah, we want to see something in progress. Now, we have a trend in progress already, so let's see if we can get this. I think we're set at a 5, a 10, and a 20. Typically, when the trades work, we don't see we see stair stepping going on, so that means the entry bar, the trigger bar that we get on, should not be taken out. So there should be stair stepping here. Okay, so we're headed off our entry, and that's what we want when we trade. We want to make sure that we're pulling off our entry. Again, here in the E-mini Trading Solutions.com room, we are looking for trades that pull off our entry. We're not looking to get into trades and have them back up on us to see if they might work. We're really trying to isolate the better trades that really work right as soon as we get in. There we go. There's 5 ticks there. I think we're going break even here at like 10 ticks or so. I think it's got to go 10 ticks before it goes break even. Now with the euro, sometimes it's the euro is a currency, and the currencies are nice when sometimes the E-minis aren't hitting of the YM, the Russell, the ES, the NQ. So for some reason, when the currencies are trading well, the E-minis sometimes aren't. Not to say that they can't both trade well at times. But we watch that E-mini, watch the E-minis in our trading room, and I'm also watching the currencies. Here's another pullback here, although we're in the trades, and we're just going to let it run here, right? No reason to get out. We have a red trend line here. We have the dots spreading. Notice the histogram spreading. Notice when the histogram spreads, that tells us. Now, some people might come here and just take their stop and cover the top of this, right? Other people will just leave it here and wait for their break even to kick in. I think this is set up at 10 ticks of profit, then it goes break even. Now, certainly the money management may dictate that you may not want to let this trade come back. So some people will come down here and just cover their entry right away. Other people will just leave it back at their 10 ticks, or maybe cover the entry bars high, because they feel that that entry bars high is what? The high here, 44.68. So they may come back here and just cover this at 44.68. The bar's high? It says it is. 68. I prefer the dome myself, but again, we like to do the videos and the trading on the particular chart trader so people can see it. Otherwise, just leave it back to where it was at the 10 ticks and just let it go break even. We know, as with most markets, that extend a little bit, they always want to pull back a little bit before they go down. Now, one of the exits we talk about in the E-mini Trading Solutions.com room is where we get these opposite color bars, meaning we get the red dot spreading out, and then it starts coming back on itself. And you can see it with the histogram, and you can see it as it's pulling back. Sometimes if you cap it off too tight, it'll come back to your entry, and then you'll get stopped out of the trade, which isn't bad because we picked up a 5-tick trade. But let's see if we can continue this trend here. And with every market, whether it's the euro, whether it's the YM, NQ, ES, oil, ZB, the bond market, every market has an ebb and flow, and you have to learn through watching the markets, through statistics and studies of the market, how far the markets do go before they pull back. And everything is measurable. You can come in there and measure it. I think typically we're seeing like usually a 10-tick pullback. This particular bar's low here at 1103. Low is 44.57. Again, we're looking right down here at the bar data. 144.57. Looks like it's pulling back up to a high of 65 right there. 57, 67. Usually we don't see more than 10 or 15 ticks of pullback. Now whether you want to hold this trade or not, right, depends on your money management. Some people might hold it because okay, here's a good exit right here. So some people can exit right here. Other people might hold it because it's under that trend line. So again, it's your business. We just show you how to use the indicators. It's up to you to decide which way you want to use the indicator. Now I sometimes will certainly cover this right here, but let's just see if we can get it to run here and turn it back around. Now it's certainly risky because you can see the trade's no longer going down, and here you're holding it. Again, we do measure the stats on these trades and other trades, and we're usually seeing again that 10 or 15 tick pullback before it wants to go down again. So it's up to you whether you want to hold it. Typically you could have got out right here, or at least covered your entry, so you didn't have a winner, which was about 5 ticks, turn into a net loser. Let's see if here we can keep this thing alive here. Yeah, and I think from trader to trader, we teach in our room that we don't want net winners turning into net losers, right? I'd rather have you get out of the trade and just take the trade again, almost like we saw up here, where if you took the trade, well, up here, sometimes we can take crossovers and then hold it, right? And then hold this pullback. The big thing is you can see it's under the trend line. Now here's a crossover, right? So this might be another place for somebody to take a short right here if we were to protect our entry. But your ability to hold it back and around your entry is certainly a skill that has to be acquired, and it's something that you would see by studying the markets and pulling back and keeping track of those data points, as we call them, on your statistics. I mean, we know what these trades do, but again, for you to believe it, and that's the big thing with trading, is believing your indicator, believing the statistics and the probabilities of patterns of randomness is really where good trading is developed, right? Now you can see here the spread is starting to come down again, almost deja vu here from this previous 1101 area. Let's see if we can get this thing back down. And with any market, when there's profit, there's the market moves, there's profit taking sometimes, and yeah, here it's chopping up here a little bit, so it might be time just to get out of this trade here. Yeah, now you can certainly come up and you say, well, I'm not sure about this and I want to get out. Well, you can come up here too if you don't want to just take some ticks on it. Yeah, if you need to scalp it out before it takes you out, that's fine, right? If you just want to cap off your entry, that's fine too, because if the trade hits again, we're not going to take a loser. See, so we got out of that trade. Yeah, I didn't like it when it was, it was a nice hold here. It was coming down, but then when it starts getting lighter here again, we can just wait for the spread and take it again, right? Yeah, we don't want you to guess on the trading. We know our indicators have some very good math behind them, and we can tell when the trades are going to work, right? As with many indicators, right? But the big difference in trading is your belief system, right? Do you believe that when you see a setup, you take the setup? And of course, what we try to do is take all the setups that set up with the particular parameters that we look for, which is basically the spread, right? Because we know when markets spreading, that's when markets are moving. And you can see when the dots aren't spreading, what's happening here. The market isn't moving. So it doesn't matter if it's the ES, if it's the Euro, if it's the British Pound, if it's the Russell, which I really like trading because it has some good range to it. So whatever your market, you'll find yourself looking at these particular setups. And again, we talk about 3 basic setups, basically 2. A pullback after a crossover. Crossovers described or defined as, again, these outer dots crossing back over the inner dots. And then you can see here it crossed back over. We had a hard time seeing that, so we started putting lines in the outer dots and the inner dots so we can see that. And of course we started putting vertical lines after it crossed over so we can get a sense